So if you remember the video from last week, I had this blue box that I drew out in that video on Nvidia, and we saw on Tuesday, just 2 days later, a complete retest over here on the 15-minute. Actually wicked out of this blue box and then continued up with that short-term upside trend, which is what I referenced in that video. As long as we remained above this blue box, any of the dips to the blue box and above would be bought up in the short term. That's exactly what we saw in terms of follow through for the rest of the week. And that brings us to where we are right now, which is actually fairly interesting because this looks like it is ready to go back and retest this blue zone yet again. And the reason I say that is because we saw a lot of consolidation after the bounce from up over here, and it's fairly weak consolidation. The reason I say that is, one, we had a gap up over here. If you remember here on Wednesday of last week, it was a gap up, but it was a gap and crap scenario. This is considered a gap and crap because we had a gap up that was followed by downside, and it went to close that gap from the morning, and it did recover a bit by end of day. So it's not the textbook gap and crap where you see a gap up followed by downside and it closes below the gap zone. That's the textbook gap and crap, but still it did show some weakness over here. Sellers stepped in, went back to fill the gap, and then it consolidated in this range. Same thing, sellers stepped in within the initial 15-30 minutes of Thursday, and then it consolidated for the rest of the day. And then the same exact thing over here, and this is more so of that traditional gap and crap setup where we had the gap up followed by downside, filled the gap, and then actually closed below where that gap zone was, and had some good volume into the end of last week, which leads me to believe that we will see a little bit more downside in the short term. But yet again, this blue zone is going to be very critical this week, especially if Nvidia retests it. As long as it stays above, remember, we will see that uptrend remain supreme. However, if it does break below, we can start to see sellers step in a lot more heavily, and we can see possibly this gap fill over here fully, because it didn't fill, even though it may seem like it. If you look at it, if you look a little bit closer, you'll notice that the low over here on Tuesday, February 6th, was only about 663. The gap fill level, however, is 661.50 over here, where this previous close was on February 2nd. So this gap remains unfilled. Would not be surprised to see this close very soon after a break of this blue box in the future. However, at the moment, we still are above the blue box, and I expect those dips to get bought, and flow has been positive. It still remains positive. It has been for a very long time now, but you can see a lot of these bullish prints, 2.1 million in premium, 745 strike, this was out the money, 1.2 million also highlighted, 735, that was at the money, and then some other big ones over here, more so in the money, and the latter half of the week as well, some large ones, 2.5 million, 1 million, 4.4 million, you can get the gist of it. A lot of bullish flow overall, so that hasn't changed that much. We saw one day last week that was an outlier. There was actually bearish flow that was hitting the tape. I believe it was this day actually. There was quite a bit of call selling, which was very different than the call buying that I just showed you and we had seen previously. So that was a bit of a switch, but for the most part, it's remained fairly bullish. I will be looking to see if that switches, or at least flips, especially if we get another retest of this blue box, since that could be a precursor to more downside. But at the moment, we still are above, so technically speaking, in the short term, I expect those dips to get bought eventually. When we do see a dip from over here, since it does seem like it will dip a bit, I expect that to get bought up until we see that breakdown of this blue box. So just wanted to start off the video talking about Nvidia. The next thing I want to talk about is SPY. Some critical levels were retested last week. If you remember, I also referenced this 493.96 to 494.37 range. This is the range of a large amount of dark pool prints, about 10 billion worth actually of dark pool prints that I referenced in the last video as well, right after the Nvidia snippet. And look at this right here. The exact low of day that we had on Wednesday of this previous week was 494.37. So it touched this dark pool print range. You never really want to use a single level by itself. It's better to range it whenever there's a lot of premium. In this case, there's about 10 billion, so it's perfect. Again, you don't want to use just any dark pool print you see. You want to see the large amounts within a tight range, which in this case there's about 40 or so cents. It's a very tight range, and you want to use that and then put them together. And in this case, we touched the upper end of that range. It bounced off and it continued a lot higher afterwards. So bulls were able to defend this range last week. Very critical going forward that they do the same thing and they're able to defend it, especially on a daily close, because as you noticed over here, we actually broke below on the 15-minute on Tuesday of last week, but it was able to rally. At the end of the day, we saw a squeeze over here. It was able to rally up and then close back within this range over here. So we never saw a daily close below this range. That's critical because in the future, and I expect it will happen in the future, we will see daily close below, and that will cause a cascading effect of more downside, at least in the near term. But until that happens, also very similar to Nvidia's setup with the blue box, until we see a break below here, short-term dips will get bought up and will continue to get bought up on the S&P 500. Very similar layout overall. The blue range equivalent of Nvidia for S&P 500 in this case would be this 40 or about 40 cent range that I showed you from the last video because of the amount of dark pool prints. This is critical, especially going into this week. If we were to retest it again, bulls want this to hold for more upside. So keep that in mind. And as for dark pool prints this week, if we go over, and I'll actually have to go back to last week here, filter since today is President's Day. But if I filter for last week for dark pool prints, we can see some of the large ones, not as crazy as the week prior, but still 1.1 billion in premium, 1.7, 1.3 billion. These are nothing too insane, but they're also not too light, just consistent amount, nothing to really mark on your chart or anything. 2.7 billion, that's a decent amount for sure, 500.86, but nothing that large around it for the most part. So I didn't mark any of these in the chart. Another 2 billion over here, but really the meat of the premium in the range we're in right now was this 493.96 to 494.37 range that I referenced in the last video. So this is the range you do want to mark on your chart since it is very pivotal for whatever directional bias we'll have, at least in the short term. So we are above it at the moment, closed above it on the weekly, so uptrend is still intact, and not any uptrend, it's an aggressive uptrend since it's been aggressively to the upside since October 27th when we bottomed in 2023, and that will continue to be the case as long as levels like this, or ranges in this case, are able to hold. We will see that short-term bid to the upside. As crazy as it may sound, the market can continue to grind higher longer than anybody can anticipate, so you just have to trade with whatever bias the market has and understand the market, especially now, likes to trade in extremes and trade as you see fit with that information. But other than that, as always, appreciate you guys watching this video, and I'll see you next time.